We're turning now to our top story. U.S. markets fell sharply after President Trump threatened new tariffs on China. The Dow down nearly 900 points. The Nasdaq fell 3.5%. The fall is in response to a lengthy post by the U.S. president on Truth Social, in which he criticized China over its new export controls for rare earth minerals. Peter Tuchman is a senior floor trader at TradeMas, and he joins us now. Peter, listen, you've watched lots of ups and downs in the market through the years. I mean, this is the biggest since April, when Trump first began this trade war with Liberation Day. Do you see this dip as lasting?
You know, it's hard to really analyze whether it is. We've been waiting. Look, there's been a lot of anticipation by all different the different tranches within the marketplace, whether they're traders or investors, that this rally almost with a lot of irrational enthusiasm. How long could it last, right? We've lasted hitting record highs. We've had 33 record highs this year so far, right? And no, it seemed like there was nothing that could be thrown at the market that would sort of disrupt this amazing rally that we've had. However, I say it time and time again, we're really only one tweet away from crazy town. So, it turned out that the shutting the government down did not sort of dislocate the rally at all. So it's sort of my opinion that, Mr. Trump said, okay, well, let's see what we can do. And no disrespect to the big guy, but, this clearly harked back to February, March, and April when, this could even go even further back to Trump 1.0, which was back when in Davos, the first time around, when he spoke about China and tariffs, the first time, and the market sold off 1,400 points quite aggressively. The market was waiting for a reason to sell off. This happened to be set the stage. It was almost like a perfect storm on a Friday, going into a weekend where, and it worked. The market, look, is this sustainable? You know what, look, the market's trading at really frothy valuations. Is this the beginning of something long term? It's almost impossible for me to say. We know from history will tell us that Mr. Trump on Monday could come back in and say, you know what, we had a chat over the weekend and I'm going to change my mind. Or we could negotiate this down from the aggressive narrative that he had on his tweet today. Anything can change, right? This could all be just a memory to us on Monday or Tuesday, or it could be the beginning of something more aggressive.
Yeah, I mean, you've accurately described the world we live in today. Let me ask you this, though, because there's been a lot of concern prior to this about whether the market was reaching, irrational exuberance levels, thinking of Greenspan's comment, years ago, and whether it looks a lot like the dot-com bubble, pre-2000. I spoke with Art Hogan yesterday, and he said, no, the valuations still don't quite match those. But what do you hear? What do you hear on the trading floor?
You know what? Look, I mean, I work with, I'm sure you've heard of Dan Ives. I work with Dan Ives really closely, analyst for Wedbush, who's sort of one of the fathers of the whole AI revolution. And we're firm believers that this doesn't have any harking back to 95, 98, 99 in any kind of a bubble at all. This is an AI revolution. We're in the second inning of a 9-inning game that's probably going to go into extra innings. The amount of investment by all the Mag 7 players, plus Oracle, Microsoft, Google, Meta, into the hundreds of billions of dollars that are going into this, the CapEx expenditure across the way. I know some people who are sort of forever bears and, the ones who sort of are want to find a way to break down this rally are just saying this is either a bubble or it's not sustainable, or any number of reasons why this isn't what it really is. I'm a firm believer it is what we see it is, that it's a revolution in AI. It's the real deal. If you go back a couple of days ago, the CEO of SoftBank, right, actually said that NVIDIA at these levels, right, NVIDIA in 2023 was a $108 stock. In 24, it was a $900 stock. It went to 1,200, split 10 for 1, is trading at 180 post-split. He feels that NVIDIA at these levels is still undervalued. Wow. Based on the demand for data centers and chips and everything going into the future. So I don't think that any of that you mentioned is legit. I think it's real. I think whether this is a one-off sell day, we know that when you mention the word China and you mention the word tariffs, the market, it's almost like PTSD in a way. that the market, can engage the way it did today. We sold off aggressively. We closed at virtually at the lows. The only problem with closing at the lows on a Friday is that very often you will see a ratchet down on Monday morning, a gap down on Monday morning, and a continuation of the sell-off. Normally, when you see this kind of a market action today, and you see the market rally into the close, where people are sort of trying to buy that dip, which we did not see, then that sort of sets the stage for a little bit more of a bullish Monday. But right now, closing at the lows the way we did, maybe the sell-off is not over.
Peter Tuchman, we'll be watching Monday. Thanks so much.
Always a pleasure. Thank you.